Hey guys, what's up? This is Tony from alphapursuits.com. So it's December 18th. This week has been pretty good. The market ended up going up compared to where it started off. And looking at the market internal, today it was kind of a down day, but sort of ended up recovering quite a bit of loss. Yesterday, obviously, there was the Fed rates announcement. So it was mostly up yesterday. After they announced it, the market actually kind of took off a little bit, even though it's not as much, looking at the way it took off compared to, I think this was Friday, Thursday, Wednesday, so Tuesday actually, looking at the internals here, it was actually a little bit better than Thursday, even though Thursday the pricing was obviously higher. So it's always good to look at the market internal to sort of understand what's going on in the market, not just looking at the price itself. And looking at the VIX right now, so here's the VIX monitoring system that I have. Looking at the ratio of VIX 9x, VIX 3M, and VVIX against VIX. All of them are still negative, looking at the shortest time frame that I have set up here, which is 30 minutes. And looking at a little bit longer time frame, 4 hours, I don't see anything that stands out screaming, say it's dangerous. Even though when we look at the daily chart, so right now, the VIX 90, which is the most sensitive one, it spiked up a little bit. But then it kind of went back down. VIX 3M is the longer term one. Again, it spikes up a little bit. So overall, there isn't really anything that screams saying it's dangerous compared to, back. This was obviously when COVID-19 just came out back in March, there was a huge spike. And then compared to most recent large spike, which was the US presidential election. Now, in addition to that, I would also take a look at, let's take a look at the VIX chart. So here we are looking at VIX and VIX 90 ratio, and then VIX and VIX 3M ratio. So the 90 obviously is more responsive. It spikes up and down more often compared to VIX 3M, and the green line is the average, and the red pink line is the ratio itself. So here's the ratio against the average. So obviously when the ratio spikes up above the green, that's when we really need to pay attention and be careful. So obviously there was a small spike a few days ago. That's when the market dropped, made the VIX 90, VIX and line went above green, but then VIX 3M didn't really do that. So until both of them jump up above the green, which is the average line, I wouldn't be, really concerned about it, even though, as you can see, VIX has been going up a little bit. So nothing to worry about as of now. Let's talk about CBAT. So this is a company that I'm looking at right now, and actually I have a small position already opened. And it's basically a company that manufactures lithium batteries in pretty much everywhere: mainland China, United States, Europe, Taiwan, Israel, internationally. And there was some insider buying back in June, so obviously they knew something was going on, and there was a bit of spike in July, and eventually a huge spike in October thanks to electric vehicle boom going on right now. So this is not the only stock that I'm noticing that has a huge spike recently, because there are a lot of electric vehicle related stocks that recently they jump up and show a large implied volatility as well as a huge jump in stock price. Now this one is kind of a good candidate. It matches some of the criteria that we are looking for here. So when I talk about criteria, first of all, obviously implied volatility, you can see is spiking pretty high. Then looking at the support and resistance line, so there are two lines when we draw it. So I normally draw this with the weekly chart first, and so that you draw a longer term, and then you zoom in and see if there are any shorter term lines that we can draw. So I have 3 panels here. One is 5 minute, the other one is day, and the last one is weekly chart. And as you can see here, there's a supported resistance line, most recently one that's around $5, and then the longer one that's about 2.5. So this is a nice setup in a way that when we look at the option chain, so here's the option chain, and as we can see, I have a position $5 and $5 strike and then $2.5 strike. I sold $5, I bought 2.5, making a calendar diagonal because I wanted to have some protection, but instead of the usual a put spread, credit put spread, I actually make it diagonal calendar because of the implied volatility difference here, which made the pricing, it made sense for me to do that. And as you can see, you can kind of do the same with January and February by selling the $5 strike and then buying the 2.5, which you should still be able to make a pretty good profit there. But that's not really what I'm looking for right now, because obviously I got assigned here with the $5. It was 4.95. Closing today, so I got assigned this one, so I'm thinking to get out as soon as it gets $5, or maybe hold it for a little bit by selling credit call, by selling call to get some credit. You can see 0.95. That's pretty nice credit premium that I can get by selling call. But maybe what I'm thinking is 2.5 put, selling 2.5 put. So get out of this and then start selling this. The reason being, like I mentioned earlier, the support and resistance line is 2.5 down here, and right now we are up here, which already bleached the 4.95 line. So it's probably not gonna be so easy for it to penetrate this line 2.5. Based on purely technical analysis, but obviously who knows, it might. Now looking at the indicators, money flow index, it has been going downwards and hitting the bottom, and looking at the ISI, it's also going downwards, pretty close to the bottom line here as well. The max CD seems to start turning, maybe, hopefully, pretty soon. So looking at the intermediate time frame, which is a daily chart, it looks like it's probably not going to go down any further for now. But obviously, looking at the longer term, who knows? It might continue to go down, or it might stay up there for a while. So in any case, what we are hoping is for the next 30 days that it won't penetrate 2.5 price range. So that's what I'm looking at here. So that's it for this week. Hopefully you find something interesting or useful from this video. And if you like the video, give it a thumb up, subscribe to the channel, and I'll see you in the next video.